Now, the Sapphire Preferred is one of the best beginner/entry-level travel credit cards that I think everyone should get at least some point in their credit card journey.
I'll admit it, travel credit cards are pretty awesome, especially when you consider that they're often responsible for helping people go on their trip of a lifetime for a fraction of the cost.
Alright, so I'm on record for further instigating the rivalry between Team Cashback and Team Travel in the credit card space. In multiple videos, I stuck my flag in the ground and advocated for cashback credit cards as my preferred of the two options for long-term monetary value. Go check those videos out if you're curious on my argument on the topic. But I have to say, I'd be selling half the truth if I didn't admit my love for travel credit cards. The flexibility and high potential for elevated rewards, access to various high-quality loyalty programs, granting you access to priority over those who are non-members, luxurious experiences that would normally cost many of hundreds to thousands of dollars if done separately, purchase protections and insurances that give you unmatched peace of mind on your purchases and travel endeavors. I mean, I can go on and on. But one of my biggest arguments against this phenomenal product is the barrier to entry. For even the most entry-level quality travel card, you need to qualify for a limit of at least $5,000 and in several cases, $10,000 just to get your hands on it. That's not light work, especially if you're just starting or rebuilding your credit. So how do we best position ourselves to qualify for these cards? What is one of the most powerful underwriting metrics we need to focus on for the most part to make sure that we get the best experience when applying for these travel cards, whether personal or business? Well, that's going to be focusing on what we in the credit space have dubbed as comparable credit. Before we dive further into the topic, I want to give you a little bit of an introduction and give you some insight on the opportunity for you to learn more on how to support this channel and get a great return on your money doing so. Check it out. Okay, before we get back on top, you have some excess capital that your bank's no longer paying you that same return on. Now the interest rates are down and you're looking for a stable, purposeful, and profitable place to invest your money. What if I told you can support one of your favorite content creators while still earning a respectable return on your money? Yeah, that's right. The platform sponsoring this video is called Oversubscribe. It's a SEC regulated platform that's connecting the audience and the creator like never before. It's an opportunity for you to invest in this channel and share in the profitability in this channel as it grows. There's no commitment right now, but there's a link in the description. You want to learn more? Fill out the quick form and let's get in motion. So essentially, comparable credit is going to be comparing like-for-like trade lines on your credit report back to the product that you're applying for with that lender. In this case, it's going to be credit cards. I'm going to paint you a picture on why comparable credit is a major metric credit card companies pay attention to and how to make sure your credit report is in the best position possible so you can enjoy those juicy benefits we just discussed a moment ago earlier in the video. So banks are all about managing risk. They'll find various ways to assess us when we apply for products, and they attach a risk level to each of us. Comparable credit is one of those major ways they analyze us. No bank is thrilled to be the first one who took a chance. That's just the facts. The entire point of credit reports is to create transparency for banks and lenders so they don't all have to make the same mistake or take on the same level of risk by shooting shots in the dark with their applicants. Comparable credit gives a credit card issuer insight on your financial reputation and your habits. The underwriting gets to glimpse into your past and see how you've managed products similar to what you're applying for. Have you worked with other reputable financial institutions? On what level have you worked with them? How long have you worked with them? How much did they trust you with? How much did you get to manage to demonstrate your healthy financial habits? Quite a bit is being answered when a bank looks at how you've managed your current and past accounts. So if you want to say you're interested in the Sapphire Preferred, for instance, you have to qualify for at least $5,000 to obtain one. Hell, even the Navy Federal flagship card requires a $5,000 minimum limit. Let's say maybe you want the Sapphire Reserve, which is a $10,000 minimum limit. In each scenario, you're going to have to basically demonstrate that you've managed a similar product at a similar level for an extended period of time. So now when these card issuers assess you, they ideally want to see similar cards that have been managed responsibly for an extended period of time with other reputable financial institutions. So how do you approach this in order to have what these underwriting systems are looking for? So here's a few tips. Start with smaller banks and credit unions. They tend to have less strict underwriting or requirements to qualify for a credit card. They also tend to give increases with less resistance. Navy Federal became one of the most famous financial institutions in the 2020s so far on the internet for that reason. Next, ensure you're increasing your income as often as you possibly can. This doesn't have to be a crazy amount, by the way. Just a few $1,000s more a year in the bank's eyes can go a long way, especially if your expenses are not rising faster than your income. Next is use the cards often and as deep as you possibly can. What I'm basically saying is your existing credit cards that you have, you want to make sure that you're using those cards frequently and tapping the limits on those cards. So at that point in time, the bank has a reason to extend you more credit. I mean, the point of credit limits in the first place is to enhance your spending power. Hence why travel credit cards require higher limits to get started with. The final tip I'm going to recommend for you is to start a deposit relationship with that card issuer if it's available. This creates familiarity, gives the bank less reason to find suspicion of you, and it gives them insight on your financial behaviors or conditions in real time versus a lagging indicator like your credit report. So coupling your credit report, comparable credit, with a solid existing banking relationship is a surefire way to make sure you can qualify for the best personal and business travel rewards cards with any financial institution you're interested in. Comment down below. Let me know which travel credit cards on the personal or small business side that you currently hold, the limits that you have with them, and why do you love them so much. To all my pioneers, welcome back. To my new viewers, welcome in. I want each of you to like, comment, share, and subscribe. Support this channel so this channel can continue to support and reinvest back into you. You've also heard earlier on in the video an opportunity for you to directly invest in this channel and actually get a monetary return on your money as the revenue on this channel and profitability of this channel continues to grow. There's a link in the description. There's no obligation. Check that link out, learn more about this opportunity, and let us know your interest level so we can continue to expand on this fundraising campaign. Other than that, I want each of you to stay focused, stay in motion. I'll see y'all soon.